Good afternoon, everyone, and happy Friday. Welcome. It is Friday, January 16th, 2026. Trading Trends with John Salama. Let's get into it really quickly. If you came out last night, I had a bunch of tequila sodas with you at the end of the CMT event. After my presentation, I had a great time. Thanks to those that came out. You know who you are. Let's get into the doc here. There is more shifting going on in the markets. I got the midday summary here of the day, of the week, and year over year. So let's get into it. I try and provide knowledge and value add. So let's get into it. Nonsense, no narrative, just truth. Okay, that's where we go into charts. All right. So today, what is going on? Let me blow this up a little bit. Today, real estate, we'll take a look at that chart. Real estate and semis at 1%. Micron really moving the entire space. Yesterday was Taiwan Semi. Today, it's Micron really being strong. And China and copper, ouch, not a good day. Both down around 2%. I got stopped out in the turtle trading system today of FXI at a small loss. They are not feeling the love for China. So unfortunately, that one I got stopped out, but a small loss, and I'm going to use that capital to deploy into SHLD. So if you hear order filled in the background, that's what it is. Swapping out of China, go into SHIELD, which has an amazing, compelling chart. New all-time highs today for industrials. Look at this mix: industrials, South Korea, semiconductors, aforementioned SHIELD, and ARKX. The space exploration, new all-time highs for all those groups. So really diversified. So this is absolutely, risk on ARKX. This is, discounting things that are going to happen years and years into the future. I even saw that there's going to be, I think in like 5 or 10 years, there's going to be a hotel on the moon or Mars. And it's 400 grand a night. So own assets. SHIELD all-time highs, as I said, that's Raytheon, Northrop Grumman. There's a lot of the constituents in there really doing super well. This, the administration, the budget, it's not going to get any smaller on defense. Semiconductors, I already told you who's doing the heavy lifting for that. South Korea can't stop, won't stop, and industrial is really looking strong. And then when you look back on the week, it's really interesting. The entire week was all about silver, uranium, and Ethereum. Every time, and I spoke about this at length yesterday in the presentation. Silver, obviously, year over year winner, best of the week. Crowded trade, yes. Can it go higher? More like, yeah, likely. It's down 4% today. I'm still in it. Uranium and Ethereum, they really came for. We'll take a look at those charts. Uranium, every time I go on X, it says 2026 a year of uranium, so on and so forth. And it's been performing. So we'll take a look at the charts. All right. So really fast, so let us go into the dashboard panel. And let me see here. What is going on. Hopefully everyone has a wonderful long weekend. Don't forget, Monday, the markets are closed for Martin Luther King, the good Dr. Martin Luther King. This is a great quote. Darkness can't drive out hate, only love and light can do that. So be nice to people this weekend and all the time, not just this weekend. All right, SPY flat, Q's down 15. Let's get to some big movers. As I said, Micron off the highs. Actually, you just hit a low of day technically, but up 5%. Unbelievable. Silver down 3, Apple down 1, not feeling the love for that either. Microsoft up 1 after having not such a great a week, not too strong, and actually it's down 5% year to date. Palantir down 3.5%. AMD up 2 with the semi strength today. Intel down 2, but that thing's been on an amazing tear, up 27% year to date. It's absolutely just insane. Don't fade the White House. Okay. Let's get into the intraday action here. So we opened here at 9:30, right around 694. I'm rounding for simplicity's sake, and they sold it immediately and actually didn't hit a low till 10:30. An ugly low. The trough was 690, surprisingly. And then right here, this 200 bar moving average is actually equal to VWAP. So I think, of course, it is option expiration as well today. So you want to see where the gamma exposure is, especially at 3 o'clock, 3:30 as we get later into the day. But we are right out of here. We're holding it. VWAP, if you can't really see there, 692.23. And pretty much not a ton here, still under 50 RSI. They really use that opening to sell it. As we zoom out here, and here is the SPY boopity bop. Hold on, let me get here. My screen's going a little fidgety. Yes. So here is SPY on a 1-year view here. Looks absolutely, strong. The peak, just so you know, was 4 days ago when we got to that 696 right there on January 12th. For me, I think it's interesting. I'm getting some cross signals here. When I see SMH all-time highs, it typically means Qs is not far behind. And when I saw the strength like we saw in RSP and XLI, and VIX is off as it is today, not materially, but it is off. Looks like we can just continue to drift higher. That being said, I do, like I said, a lot of cycles work and whatnot. I like that hammer here, the candle from 2 days ago on the 14th. But to be honest with you, I do think the top short term was on the 12th. I think we have somewhat of a just digestion of these gains going into about the 27th, 28th, something like that. So I don't think we're just going to go up and away. That being said, though, I'm still positioned long, but in different spaces. I'm long, like I said, silver, small caps, and I'm getting into shield as we speak. So that is pretty much it. And then in terms of levels, again, the SPY looks really pretty clean to me. I think we're going to probably digest to a low of about 688. If folks really get, a little bit fearful, I don't really see that happening. But if it does, we probably go to about right around that 680 mark. I think that holds this December 17th candle with that low of 671. I don't think we're going there anymore. And, folks remember over here, back going into Halloween when NASDAQ was ripping, going into its all-time highs, folks were saying, wow, 6,700 S&P, way too expensive, not paying that. And then we dropped below it here Thanksgiving week. And to be frank, I don't think we're dropping below 6,700 anymore, maybe in quite a while once we get like some kind of a crash or something in a couple of years. But I think for the short term here, things look strong. Again, minus this little dip here, those 2 days, we have been above, and I don't like to get cute with that, but we've been above 50 RSI since Thanksgiving week. Really nice moves here. You probably get some kind of a flush. And like I said, if you drop to about 675 to that 680 area, that's going to be your invitation to buy, as we likely, in my opinion, have new all-time highs in SPY mid-February, if not before that. That's my call. Let's get into markets and what's moving today, because there are some things. Real estate. Let's take a look at this on a 1-year view. Real estate, a big 1% move. That's pretty massive for real estate, honestly. Obviously, this was in the news with the everything that Trump's comments about Blackstone, taking away homes institutionally from middle America, basically. Look at this real estate. I care about technicals here. This is a 71 RSI. I had a big thing yesterday. I don't want to get into because it's going to take too much time, but it's very powerful. If you search, if you code it, whatever you want to do, how you find scans and filters for your trades. If you find a breakout above a previous area plus a overbought registration and a rising up 200 moving average, it's hard to lose money. You could typically honestly go, if it's on a 1-year view like this and you have all those conditions, you could probably buy calls 2 months out, 30 delta, and you're probably going to make 3 to 1 risk reward depending on the volatility, probably even more than that. So it typically works. Then you sell the calls against it, probably something like 15 to 20 days out. So that's typically what I like to do. The thing about real estate is it has 2 of those 3 conditions. We don't have the breakout from a former area. Don't forget, this group peaked in March of last year. Basically call it 100, and then it got to Kembade and really kind of dead money. Typically what real estate doing. And this has been sub 53 RSI just until those Trump comments last week. So for me, it's funny, I'm talking about the physical regime, how we're getting away from digital alpha and going to physical, but it's more so about, shovels and things in the ground that are needed to, manufacture the electrification of what we're going to need for, AI, et cetera, and EVs and solar. Real estate's a little bit different just because of the scarcity. We're not probably making enough homes. So it's physical. You only have so many, so that part is decent. You're not just buying something with, Google. Not everyone can be a $4 trillion company, and that's why the Qs have stalled. But for here, I don't want to chase this right here. I think this is a great looking candle. I want to see how it goes into 4 o'clock. There is, it sounds funny to say there's resistance at 99, but then there's a 52-week high at basically 100. It's technically 99.62. This thing was a dog with a SPY 52-week lows on April 7th, of course. Or April 9th, rather. This thing traded 81.5, and now here we are all the way to 98. The 200 moving average is just a flat line here at 95 even. There's your support. I think we actually get to that 95 to 96 area over the next 2 to 3 weeks. I just don't think these highs get taken out. The 200-day also is just flat line. It's not going up. It's just started going up by about 2 cents, 1 cent a day. So we'll see. I want to see how this trades today into next week. No position on it. Yeah, that's it. Real estate, a big mover today, though. Next, New all-time highs in SOXX. Don't forget, this is not just NVIDIA. This is much more equal weighting. So you get Taiwan Semi, you get Broadcom, Micron, etc. New all-time highs today for this group. SMH is doing great as well, which is much more NVIDIA. But this thing looks absolutely great. Don't forget, this is pretty interesting. This SOXX basket was pretty much crap, to be honest with you, up until early June. It's really important to understand you don't have to be in these trends for, till eternity or perpetually. Sometimes, like truly, again, this is exactly what I'm saying. The breakout from the former area for right here, it's $238 with this overbought registration June 25th. Off into the races. Was it frustrating? Somewhat. You got it at 238. Boom, what happened? You get immediate gains to 249 and then drops all the way down to 231 and then off into the races. Okay. Some doldrums here, some tough times in November when it got all the way down to 260. And here we are at 342. 345 was the peak today, actually. All-time highs in SOXX. Don't forget, a lot of these companies are reporting in the next 2 weeks. January 28th, 29th is a massive day for the market because of Microsoft, Apple, and I believe Google also reporting in that 2-day span, and Amazon Meta. Massive day. We'll see what the setup is going into if Qs will pull in and get all-time highs like the RSP. I'm not so sure. I think folks have taken their foot off the gas a little bit, and now they want all the things that if you drop it on your toe, you're going to say bad 4-letter words, basically. Heavy stuff that's on the periodic table of elements. You want to buy that in 2026. That's basically what my presentation was. That's at least going to be a first half trend, if not more. The gold chart looks insane. Hasn't even sniffed 200-day moving average in, I don't know, since 2024, at least. So this person here, I don't want to chase this here. I know it's all-time highs. Looks great. They did reject it small ball. It's still up 1.5%, but it was higher. View up on the day is 342.60, and it just gave that up. Let's see how it trades into the close for the next 2.5 hours. But for me, this, depending on how those earnings go and whatnot, but I do think this looks like it's going to pull back to about 320. So that's about a $22 reduction. We'll see. I'm just looking at moving averages here in the area of the former breakout. This looks like it's destined to me to get to 320 over the next 2 weeks. And guess what? If it does, that's going to be your invitation. Just interested to see it is overbought for the first time since October. And if you remember, October was the month of tech. They would just buy it and then ask questions later. Hence why we were on this Michael Jordan-like run, if you will, for 3 weeks overbought. They just took it higher, and it took the spot from 260 to 290. So that's amazing. Could we be getting for another run like that? I'm not so sure, just because to me, the run started here essentially on New Year's Eve short term at 300. Now we're 342. So you got, 10, 12% right there in 16 days. Trees don't grow to the sky. New all-time highs out in the SOXX. Congratulations if you have tech allocation. And then number two, if you were, you really like beta here, the ARK Space Exploration ETF and Innovation ETF, ASTS, Space Mobile, Rocket Lab. There's some things in here that are really moving today, which is what is supporting this 2% move. This is a crowd. I don't want to say crowded trade, but it gets truly animal spirits. Hence why you don't typically see like a one-day overbought. Yes, it happened in mid-May and mid-June, but here you see that for about a week. Here it was overbought for 2 weeks. Here, a week and a half, and then here we're just going on it again. It's been overbought for a week into all-time highs. This thing hasn't fallen under its 200 moving average since late April. And look at the 200 moving average at 25.60. We are quite extended from that. It is holding VWAP today marginally. It's up 2%, which is why we're talking about it. A decent size move here. I personally would not chase this here. We looked at this a while ago. This looks like in its volatile group. This looks like, to me, this will. It sounds crazy, but I'm looking at if the S&P, like I said, they're going to take their foot off the gas for, into the 27th, 28th or so, beta will also take their foot off the gas for a little bit. This group is super, super hot, but the chart's telling me that this is going to mean revert and digest these gains somewhere around that 32-30 half area in the next 2-3 weeks. Do I want to sell calls today? No. Do I want to buy puts on a superstar like this? Not necessarily. So right now, not a ton of trades coming to mind. Like I said, I'm much more into the physical trade right here, and those are big in the turtle system for me right now, and it's been working really well. So ARKX, though, if you're in it, congratulations, new all-time highs. I don't think you're going to get paid if you want to sell, like the 31 puts in Jan or Feb, but you can check the option channel. I don't think they're also super, super liquid. All right, let's look at the losers. I got stopped out of this one today. China. FXI down 2% last I checked. Yeah, down 1.9 here. Yikes. So it's interesting. So this peak, China peaked in October. Okay, if you recall, this was a month before our elections. Peaked at $42, and very quickly, just truly a week later, it went all the way to $38. An ugly, ugly day on October 10th when it was down 5% in the country. And then it rallied very nicely, but look at that, not even close to a double top. And we've been trying to basically, chop wood, carry water, as they say. It held in very nicely on December 16th, truly to the 200-day moving average. Tell me technicals don't mean anything, and they're just astrology. It's not. Programs, algos, look for this stuff. And it got right there. The low on the 16th, 37.68. The 200-day moving average, 37.68. Coincidence? I don't think so. So that being said, why did I get stopped out? 2N, it's volatility adjusted, so it's baked in. And it just, and that's not, it corresponds with slipping under 50 RSI. Once that happens, sellers are in control. They sell first, buy questions, or sell first, ask questions later. And that's what I saw in China here, down 1.9%. KWeb off, I believe, even more. Baba had an amazing week, as indicated here. Looks like that whole, nation for now peaked short term on January 12th. Right here, I don't like the resistance either as well. The ceiling looks pretty sharp here at about 40.70 rather. It has not been there since, my gosh, mid November. So we've been 2 months here under that. The 200-day moving average still rising due to its ascent to that October peak. And also bearish divergence here. Notice when you got that high, you didn't even get to 66 RSI. So you can imagine a drop, and boom, obviously the geopolitical event happened on the 10th. But regardless, that was when you have a global liquidation. If you remember, that happened with crypto too on the October 10th. Was ugly. So that's the call for FXI. I think over the next 2 weeks, this group is not going to have a great time. It probably hangs in around $39 where we are today, and with a floor of that 200-day moving average of 38. If it gets to 38, possibly, I would enter a small position, but this one looks like it's just ran out of juice right here. I don't like the large rectangle that it's living in here from 42 to 37. You could probably sell iron condors, but nothing really, standing out. I wanted FXI just with the U.S. exceptionalism trade taking a little bit of a back step and getting some EEM exposure, but FXI was not the right play. I'll tell you when I'm right. I'll tell you when I'm wrong. And FXI down 1.8% today. Let's look at something else, and this is surprising. Just pullbacks. Copper, silver's down big today. Copper down, last I checked, 2.5%. Yep, same thing here. So this is CPER. COPX is also down today. We were talking about that last night as well at the presentation. So messy chart, of course. Look at this. I mean, this was crazy. It's tough to do charting on this. Again, this is the CPER ETF. This is not copper futures, so do understand that. This had a 52-week high here on January 14th, just 2 days ago at 37.5. And boom, big, fast moves here. You got a beautiful rise to moving average that really hasn't been under since mid to late September, and then it quickly erased and got overbought behavior here. To be honest, this is a very strong looking chart. I like the pullback that you just had to the 20-day moving average up to 35.5. That's, if you have no copper position, like I said, I already have silver. I think this is a decent entry here. Look at that. It truly dropped today to the 20-day moving average. And it looks like they're bidding it up from there. Not huge. It's up 1% from the lows. But I like the risk reward personally at 35 for entry. And my target is right around 37, just inside of the high struck 2 days ago, 37.5, right around there. So not as much juice as it had before. I mean, this thing was $32 just, at the beginning of December. But I do like this one, and the relative strength versus SPY since the beginning of 2026, although it's 2.5 weeks of data. It's like, not a ton of, but I'm looking at the more, longer term trend as it bottomed like everything else in early April at 26 spot. Looks good. I like the entry here at 35 with a target of 37. You're probably about 36 calls. Be careful with CPER, not super liquid. A lot of folks like to go into COPX. There's more operating leverage there as well, more of a beta play. And Okay, top three gainers in the past 5 days. Number one, let's get into it. I've been talking about it. Number one trade of the past 5 days on average of it's up 11% in the past 5 days, or roughly 2% a day. Today, bucking that trend down 3.5% is silver SLV, the best trade of the week, up 11%. It peaked 2 days ago at 85 SLV. Again, this is the ETF, not the futures. This is not even as good a chart as gold. Gold hasn't even touched its 200 moving average. SLV, you truly didn't need to be in this trade until, if you want to just be, good with it here. What I was saying before, area of the former breakout. So for this, it was $33, June 9th, with the overbought registration of 72. That was your trigger. I know Jerry Parker, the charter, would do so. If you had a shorter term system like this, and you're in long and strong from there at $33, and look where we are today, $80. And it just goes on amazing runs here, being overbought. It's a boomer trade, it's a scarcity trade, it's a short squeeze. Speculators are short. It's a lot of things going for it, which is why it's up a triple year over year. So September overbought basically the whole month, and then from Thanksgiving on and off through just this week, being overbought. Now we're at 67 RSI. I'm curious where this drops to. Essentially, I think it's probably going to get to somewhere around that 60 RSI, like it did here on January 2nd and January the 8th. I don't think it gets that much weaker than that. Just crowded trades are an interesting thing. They usually don't end well. And that would correspond very likely with a drop to $72. So we'll see. I have, of course, tightened my stops on this. I've taken some profits along the way. But silver, just an amazing run, kicking SPY butt since June. Just amazing momentum to the upside. I think it's reached its short-term objective right here. And like I said, I am foreseeing a drop to about $71 over the next 2 to 3 weeks, and it'll hurt. And I'll likely be out of it by then, or hedge a position massively. All right. Number two, and like I was saying about this, uranium, the electrification of everything. We're going to need solar and wind and all that. This group peaked on October 15th at 60.5. Beautiful looking chart with no hard times. Essentially since mid-May, overbought for basically the first half of the summer. And again, same thing here. Area of the former breakout combined with overbought right there got you in at $32 at the end of May, right? But when we were getting ready to, wait for summer and whatnot. $32, it took you all the way to basically a 2x objective. And there you go. What more do you want? So here, I was looking at this as well. Uranium, great looking chart here. For me, it's really the flavor. Like I said, this is the second best trade of the week. It's up 7.5% over the past 5 days. Today, bucking that trend even higher. My objective for this short term was honestly about $53. So it's exceeded that. And it began here, this run right around New Year's Eve, similar to the other candle we had on the other chart. And it basically triggered a buy at 42.5 to $43. And here we are at 54. So I think this will mean revert and digest its gains to about that 49 quarter level. Again, the area of the former breakout that it was tussling. Old resistance becomes new support. And I think that's what's going to happen here. That 49.5. And of course, that's $5 away, 10%. It's going to hurt. Uranium is volatile like silver, and I'm expecting that. Would like to see overbought, to see if that's going to go higher. But again, you're getting into borderline nosebleed territory here with $56. Don't think that's going to happen right now, but we shall see, especially as I think there's going to be a little bit of a beta slippage for the next 2 weeks where they take their foot off the gas on that stuff. They could pile into stuff like uranium. We shall see. But for right now, this came a little bit too high for me. Again, no real trades popping out at me for the moment. I really do think I'm really attracted to this physical trade and avoiding software and India, which look like crapola. Next one, this is interesting. Ethereum, crypto starting to wake up. I was having many conversations about this last night. I think Bitcoin, we'll get to Bitcoin first real fast. I think the sellers are in control until it gets to 105K. And truly, once it gets to 105K, new all-time highs are coming because there's going to be a massive paradigm shift. And then the digital gold narrative will become a thing again. And then you're going to see it because of the FOMO. It's going to go probably a God candle, 105. Small chance to me, it's almost like an 80-20 probability thing. 80% new highs on the way. 20% they get it to like 106. It spoofs a couple people, and then it starts going lower, and you see this, back to 95K type deal. Here is Ethereum, which is the third best trade this week, up 6.5%, just a hair behind uranium. Ethereum peaked back in August. You got a divergence here. I'm looking at ETHA at $37, essentially, is where it peaked. 200 moving average is right here at 24.25, essentially rising. And it looks like, look at this resistance here. We have not been north of $26 since, what is this, Veterans Day in November here, okay? Now, don't forget, this thing came from $21 December 18th all the way to 25.5, an amazing move. I'm still on a buy here. This looks heavy. And if you want to even, 26, they're just going to sell it. That's corresponding with that 105 unit level, essentially, in Bitcoin. I just don't think, I'm just not a believer yet. If you want to be a lazier trader on this, you can almost sell those calls or do a, bear call spread. So you could sell the 26, buy the 27s. I think that'll do you okay, at least short term, until I'm much more convinced. But to me, this looks like it's going to go to about, just be more boring. I want to see how it trades this weekend, this long weekend. But for me, I think this is going to head back down to about 24 quarter even, and just frustrate more folks. But if you're long Ethereum this week, congrats. The only things that did better than it were silver and uranium. All right, let's get into the losers. Just talked about this, avoiding software. Software, the worst trade of the week. IGV down 5.5, almost 6% this week. Today down 70 bips. Ew, look at this. We are hitting, this is crazy, 8-month lows essentially in software. And the reason is simply this. If you look at the all-time lows list, it's Figma, but more than that, it's Fiverr, 52-week lows for ServiceNow, Adobe. All these companies are having, Atlassian, who runs Jira, are having massive business model risk because AI agents that they used to charge you $100 a month to do this stuff. And I wrote a post about this last night. Now that AI is doing it for free, you don't have to pay Gemini, and they're doing this. So ServiceNow, all those kinds of companies are having massive business model risk. You used to pay massive premiums, DocuSign, Box, all these things. These companies that used to get massive premiums. Why? Because of the ARR, the accrued recurring revenue. Now you're not getting recurring revenues. And Fiverr is all-time lows. Why? Because the whole gig economy, side hustle. Yeah, you can have an AI agent do it for nothing. You don't need Canva and all these things. So they're having a massive price risk. And look at that. It peaked the month before Qs. And when you knew the market was truly saying that this group is in trouble, they still do have a rising 200-day moving average, but 8-month lows should give you the opposite of warm fuzzies, okay? When this group really started having trouble was November 18th. And I'm doing that based on it went under the 200-day moving average, and it registered a oversold marker here, registration. And you don't like to see that from any kind of a superstar. So how low do they take it? For me, I kind of have my floor right here at about 9900. Note that they did send this to as low as 98 today. View up on the day is 99, and it's exactly where it is right here, down 75 bips. It's been the worst trade this week. If you own software this week, yikes, not too good. My base case, I think, and it's not bullish for this, I think it's probably going to have a dead cat bounce. It's not going to be a straight line, and this is going to get to about 105 over the next 2-3 weeks. It's going to be frustrating, and this 200-day moving average is going to start to go sideways, and that old right here, there's going to start to become resistance here. So this is going to get a hard area right here of 105. I don't think software is looking good due to the pricing of these assets in the market. And you've been seeing it for 2 months now. Number 2, what's down not as much as software? Look at this crapola. Nat gas, new all-time lows, January 15th, yesterday. This thing had a 995 handle. Was not so sure it was going to go that low, but I said I was bearish. It's also freezing on the East Coast for the next 2 weeks, so this may catch a bid. We'll see. Today it's down 80 bips. Lost 3% of the week. I think finally, and you also look at this, you did get a divergence here. So I did not get oversold with a new all-time low. In fact, the RSI only got to 36. So for me, I think it may have another tough Monday, or Monday's closed. We'll see how the futures trade on this. But I think this is on its way to a dead cat bounce to about 1160. So that is $1.40 away. Pretty decent sized move. So we'll see, it was at 12%, something like that. So I think you'll get that, and then it'll probably correspond with a 50 RSI, and then they'll reject it. So it's crazy. That best case, in my opinion, it will be those late August lows. But nat gas not in a good place. And then number 3, so these are the worst trades of the week: software, nat gas, and number 3 was XLC, which of course is basically the Meta and Google fund. This group peaked. It's important to understand that this group peaked in September. It was overbought. There was a euphoria, and it basically peaked at 119.5. We're off a little bit. Here we are at 115.5 here. Your 200 moving average is at 109. We are under 50 RSI for about 3 days straight. Google, one of the shining gems in the market. They essentially own the internet with cloud, YouTube, Gemini. I mean, come on. I think this is setting up. Understand, like I said, the very important, colossal earnings from these guys, specifically in this group, in about 12 days' time. I like the floor here. This group is very strong. And I like the area it is in. I think the floor on this is right around 115. I think it might have a tough day on Tuesday. I'm not so sure that this is done, but I do like your risk to reward here with an entry of 115. I do believe this is going to move to 117. Not a ton of meat on the bone there. And then ultimately, if they outperform and surprise to the upside, which is, sometimes they do, I do think a target for the next 2-ish weeks, 2 to 3 weeks, is 120. The unfortunate thing is that's maybe going to be a double top, but we shall see. But again, great looking chart. This thing has not fell on hard times since late April, and that is XLC. There's surely worse spots you can be in than comms communications. All right. So this one looks better to me. I mean, if you want some beta exposure, XLC is decent. I just don't love that part of the market for the next 2 weeks. This does seem to be a bright spot. I'd probably buy call spreads with a tight stop. You could probably do like an at the money, 115, 120, maybe Fab call spread if that's listed in option or in liquid. Otherwise, maybe you can go out to the Aprils and buy like the 120 calls. But be careful. Have your tight stops and position size accordingly. Top 3 trades of the past 5 days. If you've been long silver, uranium, and Ethereum, congratulations. You absolutely navigated this market absolutely perfectly. And now, as we wrap up, let's get into the 3 trades of the past 52 weeks, the best trades of the past year. Number 1, silver, up 186%. As I said here, I personally, like I said, I got it a couple days ago. It's through a Turtle trading system. I think if you get the opportunity, this trade has looked, just buy first, ask questions later. It has been unstoppable, truly unstoppable since early June. And that's just easy to say. I love the setup here. If you get an entry at $70, you wake up one day, it's down 12%, something like that. It's silver, it's crowded, it's very possible. Set an alert. If you get this thing to drop down the SLV to $70 to $71, I would enter. The trend is not over. We need it. There's a short squeeze. It's likely going higher. Just a supply and demand imbalance. And this thing hasn't been really putting more to it. This thing hasn't been under 45 RSI since April. That's really quite strong. Your year-over-year winner is silver. Now, let's see first up for GDX. Oh, and just the other ways some folks say, oh, how do you play it? You can buy one of the silver miners. You can buy SILG. You buy SLV. I go with the strength here. This is top down. You could play SILG. Just go SLV. You don't have to get too cute. Keep it simple, stupid. Kiss. And next, GDX is your number 2 winner, up 164%. Just an amazing group. As I said, operating leverage. This group was hated in 2024, and they're crushing it this year. I wouldn't chase it here. As you see, here's the chart. Maybe wait for about 2-ish weeks. I do think it's going to digest some gains and head to about $91. So a decline of about $6. And that'll be your invitation with a target of about 90, not too far from where it is today or the other day, basically 98 target. So 91 to 98, beautiful. You could do call spreads. You could go out and buy April at the monies, or another way you could probably buy the 30 Delta March calls. So a lot of different ways to do that one. Again, look at this chart. I mean, when's the last time? Gold looks even better than this in terms of the chart strength, but this has not had one close of the 200 moving average. It's actually hard to see here, but it's actually been above that since all year, since last January. So just an amazing chart. They buy them on pullbacks, and you should be too. And number 3, best trade of the past year, South Korea up 104%, new all-time highs today. It touched 112. My golly, this was not a trade you need to be in all year either. Again, area of the former breakout, overbought, 200-day moving average starts to stabilize. Bang, you should have got in at $60 in May. And you can check the videos. I actually was talking about South Korea back then with the strength, especially when the dollar debasement trade was starting to happen in South Korea. Wow, a lot of good things happening over there. They're basically the headquarters for high bandwidth foundry. They're doing AI memory. This is they should be making billions and billions and soon trillions of dollars. It makes sense. So they're in the right spot. So that is South Korea. And in terms of a setup, again, it's Samsung and it's Hynix. So it's a different way to play tech away from the whole US exceptionalism thing. I personally wouldn't chase it here. Do understand that the high today was 112.09. It is holding a VWAP of 111.5. It's getting pretty close to it here. You can see the gaps here. It's kind of messy. The volume isn't amazing, but it has been overbought for basically all of 2026, the last 11 days. I think this one does move too, not quite like volatile as silver, but you can wake up and have this one be down if there's some kind of a pullback on, EEM or a dollar spike, etc. I do think this one digests gains to about 103.5. But that's crazy. It's $8 from here. I think it's possible. And that will be your invitation to get into the, best geographical ETF in all of the land with actual volume. I know Israel, Chile, but I'm talking about things that actually have at least more volume, and you can play through options and different ways. And leverage ETFs. Koru is a way to play that. I think it's the 2X or 3X ETF. So there you go, up 104% in South Korea. So crushing it. I don't see these trends changing. Silver, gold miner, South Korea, allocate. I'm not just talking about semiconductors. You're going to be fine. Tech is, I believe, supposed to do 2 times growth in earnings this year versus S&P. You're going to do fine if you're in tech. I don't think you're going to get, absolutely hammered. But there are other areas where your actual more offensive and almost through this defensive alpha is going, if that makes sense. Have an awesome long weekend. I will talk to you guys we'll try and do a video on Tuesday. Peace.